One of the first steps in achieving financial independence is to create a financial plan. You may remember Alice in Wonderland, where she comes to a crossroads and asks the Cheshire Cat which path she should take. The Cheshire Cat asks where she is going, and Alice responds that she doesn't know. The cat says that if you don't know where you want to go, it doesn't matter which path you take. So, to choose your path, you need to know where you are and where you are going. So where are you? Do things own you, or do you own things? How are you spending your money? Are you saving money? How much debt do you have? Do you have any assets? And where do you want to be? Is your plan to get out of debt, to pay for education, to buy a house? Do you want to retire young? These are the questions that you need to ask yourself. One tool you can use to help you achieve financial independence is to create a personal financial statement. A financial statement is commonly used in accounting and consists of an income statement and a balance sheet. An income statement shows your financial activity over a period of time, in this case for a month. If used in advance, it is called a budget. It is split into two parts: income, or money that's coming in, and expenses, or money that's going out. The difference between the two is the net cash flow. The key is to keep this number positive and high, because a negative number means spending more than you earn, which Charles Dickens defines as misery, and a positive number means earning more than you spend, which he defines as happiness. The income section consists of your earned income and passive income. Your earned income is the money you have to work for. Now, I recommend putting your gross income here and putting your taxes down here in the expense section. That's because you want to focus on lowering those taxes. Now, passive income is my favorite type of income. It's money that comes in whether you work or not. Your goal should be to make the passive income greater than your total expenses. When you have done that, you have achieved financial independence. Let's look at the second part of the financial statement, which is called the balance sheet. This is a snapshot of your finances at a given point in time. It consists of your assets and liabilities. The difference between your assets and your liabilities is your net worth. On the asset side, I like to show not only the asset value, but also the amount of cash flow that those assets are creating. I also like to split the assets into ones that provide cash flow and ones that don't. This is because you want to focus on the first group. If you work to build up those type of assets, they will work for you. But if you work to own things, things will own you. Now let's look at liabilities. These are your debts that need to be fed. Again, I like to show both the amount owed and the payment amount here. You will have two values now of net worth. The most important to focus on is what I call the cash flow net worth. This is what you want to grow, but you should also track what I call the banker net worth. This is what you would need, for example, to apply for a loan. So now that I have shown you a bit about personal financial statements, your first step is to create your own. At first, it might look like this, but then as you grow your cash flow producing assets, you will see your cash flow increase, and soon you will reach a point where these assets are feeding you to such a point that you no longer need a job. Please take the first step. Go to my website at www.realestatewealth.us, and under your next step, fill out your name and email address and put free sample financial statement in the comments section. If you do this, I will send you a free sample financial statement that you can get started. I look forward to hearing from you.